Hello, welcome everyone. My name is Kris Elliott. I'm a solution specialist for Desktop Imaging. Desktop Imaging is a digitization and process automation company. So invoice processing is one of our core service offerings that we bring to market under our service brand DI Invoicing. The e-invoicing components of that service enabled through our partnership with Tickstar. I've personally been a part of e-invoicing adoption in New Zealand since the very first launch back in 2019. And from there, I've worked for one of the first three access point companies to receive New Zealand accreditation and have been helping people ever since with their adoption journeys, not just across New Zealand, but also Australia and Singapore and Japan as well. I'm here today with Perry, and I'll get him to introduce himself.
Thanks, Kris. Hi all. Now, as mentioned by Kris, my name's Perry and I work for Tickstar. This is my 10th year working on e-invoicing, and during that period, I've worn a range of hats. I started off as the director of the Australian Government PEPL Authority. Following that, I was invited to come across to New Zealand, where I spent 12 months on secondment as an advisor to MB within the New Zealand PEPL Authority. My primary focus while I was working in that role was the e-invoicing adoption strategy and industry relations within the New Zealand market. After that, I was fortunate enough to be picked up by Xero to help with their drive of e-invoicing in the ANZ region. So I'm currently the Global Sales Manager for Tickstar, which is an e-invoicing service provider that was acquired by Xero in 2021. So in a nutshell, Tickstar is one of the oldest and most successful providers on the PEPL network. We've been around since its inception of PEPL in 2008 and developed the first ever access point to send production cross-border PEPL e-invoice. Now, globally, we account for around 9% of monthly transactions, and approximately 40% of businesses registered onto the network are listed using a Tickstar SMP service. We also heavily support the service provider community in PEPL, with around 20% of all the active 400 service providers using our technology under the hood for their own solutions. We've numerous team members involved in PEPL working groups and boards, and they're directly influencing the development and government of the standards each day. Thanks, Kris.
Thanks, Perry. So our topic today is obviously e-invoicing, and this is the online version of the events we hosted last month, both in Auckland and in Wellington. We've positioned this as an Ask the Experts event, so it's all about the questions that you have for us. We've tried to structure the agenda today around some of the more common questions we get asked in the hope of preempting some of those questions that you guys might have. But if you have a question, there should be a Q&A button on your toolbars. We've asked Eddie from Tickstar to answer the straightforward ones for us while we're talking, and if there are any curly ones at the end, then he can ask Perry and I on your behalf. When we did the in-person events, they were 2-hour events, so we've had to work to try and cut some of the content down to fit this into a 1-hour webinar. One of the segments that we have left out of today's session is the live demo of what sending e-invoices from Xero looks like, which is basically a look at what you would be asking of many of your suppliers to do. If anyone's still interested in seeing that, then we'd be more than happy to show you. So if you get in touch with us after the session, we can book in a time to do that. So with that said, the first obvious question we'll cover is, what is e-invoicing? While some of you might be fairly well along in your e-invoicing journey, and perhaps you've done a bit of reading and research already, looking at the attendees, I do see a few new names. So we'll start off with a quick recap of some of the basics, just to make sure we're all on the same page. The next question, why are we doing this? And by we, I mean the royal we of New Zealand in general. So Perry is going to have a bit of talk about the journey so far, about government policy, adoption trends, and what might be coming next. A question I often get is, will this replace my accounts payable system? So what I'd like to do is put receiving e-invoices into context within the accounts payable process so that we can have a look at what that workflow can look like from a high level, and also talk about some of the idiosyncrasies like organizational part numbers and stuff like that. E-invoicing only works if we have both senders and receivers. So the question, how do I send e-invoices, probably needs a bit of our attention as well. And Perry will give me a break and have a little bit of a chat about that with us too. And as we get towards the end, I'll touch on how do we onboard suppliers. It's one thing to become enabled to receive e-invoices, but how do we actually get people to start sending them to us? We've given this a lot of thought, and we now have a really good case study around how we help Fire and Emergency New Zealand. And I've got some stats and results we can talk about what's been working and what doesn't. Lastly, we have the question, how do I get started? Even if you don't have an e-invoicing project already on your roadmap, there are some very basic things that you can start doing now to smooth the road for an e-invoicing project in the future. And then, of course, if we have time left over for some Q&A at the end, Eddie can ask on behalf any of the questions you guys post in that Q&A section at the bottom. So cracking straight into it, when we talk about e-invoicing in New Zealand, you can't really talk about it without using the word PEPOL, but depending on the context, when someone says PEPOL, it can mean something slightly different. So I wanted to start off just by clarifying the different elements of PEPOL and hopefully clear up any confusion about what it is and what it isn't. At its heart, PEPOL is an e-procurement framework whose goal was to enable fast, secure, and accurate exchange of procurement documents, while also being an open standard that anyone could adopt. The idea was that it wouldn't matter what your finance systems you have and what finance systems your trading partners used, you could still exchange e-procurement documents with them. So if we fast forward to what that means in practice today, it means that even if you're using a Tech One or an Ozone or any one of a number of other ERP options, your suppliers can be using anything from Xero to SAP, and you can all still exchange e-invoices with each other. That interoperability is achieved through the formats and the network, not through the finance systems themselves. While there are some other global standards for e-invoicing, PEPOL is the one that was adopted and endorsed by both Australia and New Zealand governments as the chosen national standard in both countries. And a big part of why comes down to the fact that PEPOL is not only the formats and the specifications for what an e-invoice is, but it also provides a closely regulated network through which the wider suite of those e-procurement documents can be exchanged. So some people might compare PEPOL to, say, an EDI framework of yesteryears, and in some ways that is true. However, with EDI, you typically have a larger organization enforcing a standard onto its smaller trading partners. Often there's little to no choice in integrators, and often there's not much care that from the perspective of those smaller trading partners, they likely have multiple formats to adopt and manage depending on how many supply chains they're in. PEPOL was designed very deliberately to avoid that situation and level the playing field. And the structure of the network means that trading partners can use different providers to achieve their e-invoicing goals. But more than that, the adoption of PEPOL in Australia and New Zealand means that many of the interoperability differences between those closed supply chains are now removed in order to create not just an industry or a national standard, but also a trans-Tasman standard for e-invoicing. So there are three kind of general pieces to PEPOL, which are the document formats, the network, and then the governments, and those three elements all overlap with each other. You'll recall I just said that PEPOL is an e-procurement framework, and that's because the e-invoice is just one of several different e-procurement document types. While we're not going to go there today for our discussion, I did just want to make it clear that PEPOL isn't just about e-invoicing alone. A comment I still hear quite often when I ask people whether they're e-invoicing yet is, well, yes, we've been emailing PDFs for ages now. The problem, of course, is that an email PDF is not an e-invoice. So let's quickly just touch on what an e-invoice actually is and how it's different from a PDF. Because many people assume that a PDF is an e-invoice simply by virtue of it being electronic rather than physical. But that is not the case. A PDF, despite being an electronic file, is still created and designed around the assumption that it needs to be read by people and may one day need to be transformed into an A4 piece of paper. And that piece of paper is still a fundamental assumption that impacts how we handle those PDFs, even if it's never actually printed. PEPOL e-invoicing is about transforming the nature of the invoice itself and changing the vehicle used to communicate the information. It's about improving the way that the information is communicated, knowing that it's going to be read by a finance system and not end up in a physical filing cabinet. So an e-invoice isn't a document in the piece of paper sense of the word document, because it's a collection of data designed to be read by an application rather than a person. And it's that difference in format that allows applications to ingest e-invoices faster, more accurately, more consistently, and it enables some of the automation options more readily. Boiling it down to basics, a PEPOL e-invoice contains a bunch of mandatory fields for what it must contain in order to be communicated through the network. So for example, the common stuff you'd expect to see on an invoice, like a date and an invoice number, etc. However, there are also a bunch of non-mandatory fields that they can have, but aren't made compulsory at a transmission level. To help bridge that gap between the mandatory stuff and the non-mandatory stuff, the New Zealand and Australian governments work together to come up with something called the industry practice statements, which govern which non-mandatory fields are considered best practice to include. And things like purchase order numbers and payment due dates fall into this category. Now, as a receiver of e-invoices for accounts payable purposes, this is awesome because it creates a level of consistency to what you're expecting to receive. However, it's important that we're all clear about what that actually means in practice. While certainly some of the optional fields are strongly recommended and are considered best practice, nevertheless, they're not mandatory. And a PEPAL e-invoice may still be valid for transmission, even if those fields aren't used. So for example, if your accounts payable rules require that all invoices have a purchase order, you could still receive an e-invoice that doesn't have one. Your validation process should then handle that e-invoice as an AP exception, as your requirement can't be pushed back onto the PEPAL network at a format or network level to force those non-mandatory fields to become compulsory. You would still have to manage an exception process around your AP invoice and validate against your business rules. So to put it in a slightly different way, if someone were to print an invoice and stuff it in an envelope and post it to you, you wouldn't expect the postman to open the envelope, read the invoice, and then not deliver it if it didn't have a purchase order. So in a similar way, you can't expect the PEPAL network or the access points to not deliver something that doesn't meet your rules. They will still deliver what was sent, but it's on your process to manage any validations and exceptions to those rules. The second piece of the puzzle is the network itself. Unlike some other e-invoice or EDI formats, PEPAL includes a secure network through which all the parties are verified and the document formats are enforced. Now, the example on your screen is not a diagram of the network itself, but more a workflow representation of how it works in an accounts payable scenario when you are the receiver. You'll see that different senders can use different access points that allow them to send via the PEPAL network. The main roles of those access point providers are to verify the identity of the parties on the network and to enforce those document format rules. And this is a big part of what makes PEPAL so appealing, because interoperability is achieved between trading partners while still preserving the choice of technology providers. Becoming an access point for the network is a process that requires accreditation and certification from both the PEPAL authority within the country you're in and also from Open PEPAL themselves. This ensures there's an integrity to the network because not only are all the technical requirements enforced, but there are also elements like know your customer or KYC and identity checks that are enforced as well. So you can have confidence when you receive any e-invoice that it has in fact come from the party claiming to have sent it. The role of the access point is where Tickstar fits into our discussion today. And Tickstar being a global access point provider to the network and can help with getting e-invoices into and out of the network. Where Desktop Imaging fitted is we provide a service that integrates between your finance systems and the Tickstar access point. So what that means in practice is that you can be registered on the network to receive with Tickstar. Desktop Imaging can then receive those e-invoices on your behalf. We can validate them against your business rules, your vendor data tables, alongside any emailed invoices to ensure a consistent AP process, manage any exceptions and rejections, and then provide that last mile of delivery to your finance system. So coming back to this idea of interoperability, the easiest way to get your head around how it applies to the network is to use a rough analogy of cell phones. When you buy a cell phone, you also need to have a relationship with a telco to connect you to a cellular network before you can start making calls or sending texts. The various telcos sort out the technical formats so that when I have an iPhone with One New Zealand and Perry has a Galaxy with Spark, we can still call and text each other seamlessly, even though we're using different brands of phone and different cellular providers. And that is, in essence, what interoperability is all about. It's giving you the freedom of choice of branded partners without impacting functionality of what's being delivered. So this is also true of the PEPAL e-invoicing network. You can have complete choice over which access point provider you want to use and which finance systems you're using, but you can still transact with your trading partners on the network because the access points in the network handle that transformation for you. In order to transact on the network, whether as a sender, receiver, or both, you need a globally unique identifier. Here in New Zealand, it's the NZBN or the New Zealand business number. And because that number is globally unique and because the identities of the parties are verified by the access point providers, this means you can only be registered to receive e-invoices through one access point. You can send through as many as you need to, depending on how many systems you have that generate invoices, but you can only receive through one. So think of it a little bit like posted mail. You could drop an envelope into any post box in the city and it would get to where it's going, but you can only have one letterbox at the end of your driveway for receiving. The last piece of that PEPOL puzzle was the governance. I'm conscious of time and that I'm talking really fast, so I'll try and get through it pretty quickly. PEPOL e-invoicing is regulated to a degree by the accreditation process for the access point providers and governed by open PEPOL agreements. So this creates a hierarchy of sorts where at the top you have the open PEPOL organization, who are a not-for-profit based in Brussels, and they govern the document standards. They also run the SML, which is essentially a directory service for identifying which access point provider and each party on the network is using. And they appoint the local PEPOL authorities within each country or region. Here in New Zealand, ours is the Ministry of Business, Innovation and Employment, or MB for short. So they sit in that middle tier as New Zealand's regulator of sorts, and they, in partnership with the ATO in Australia, administer the format extensions that make e-invoicing content specific to us and less reliant on the European-centric stuff. They promote the adoption of e-invoicing to government and the wider economy, including adherence to the industry practice statements for best practice, and they help regulate the accreditation of the access point providers that are allowed to connect New Zealand entities to the network. They do that in partnership with the ATO in Australia. So if you are an access point on one side of the Tasman, then you can also be one on the other side as well. Lastly, there are the access point providers who are essentially the gatekeepers of the network. So anyone transacting, whether as a sender or a receiver, can only do so through an access point. The access points have strict know your customer obligations. So they validate the identity of all the parties, which is a big thing because once you can be confident that things are coming from the party claiming to have sent it, third-party impersonation fraud is pretty much eliminated. The access points very generally come in two flavors. You have what I'd like to call the proprietary access points, where they'll connect to their own platforms and only their own platforms. So for example, somebody like Esker is an access point provider in New Zealand, and if you are using that accounts payable platform, then it would make sense to look at using them as an access point as well in some cases. But if you don't use their platform, then their access point is of no practical use to you at all. So that's where the other type, which is what I call the non-proprietary access point providers, come in, and they will integrate with any system to enable e-invoicing for any particular platform. And that's where Tickstar fit, because it doesn't really matter what your finance system is. Tickstar can still provide yourself or your technology partners like Desktop Imaging a way to connect your systems to the PEPOL network. So hopefully that's given you guys an answer to the question, what is e-invoicing? I'm going to take a drink, hand over to Perry, and come back to you after he's talked about why we're doing this.
Thanks, Kris. Now, I'm going to, as Kris mentioned, cover a little bit why we're doing this, a bit of a global overview, and the journey so far in New Zealand. Now, since day one, there's been a fairly consistent message regarding e-invoicing and PEPOL, and that's get ready because e-invoicing is coming. Well, I want to change that narrative a little bit. I want to emphasize that e-invoicing is already here. There are a significant number of businesses in New Zealand that are already sending and or receiving e-invoices with their trading partners and are experiencing the benefits that it has to offer. If you look to your screen, you'll see the first of some of my charts. And as you can see, e-invoicing uptake is on the rise. It's more than doubled over the past year. There are now over 52,000 Kiwi businesses registered on the e-invoicing network. Now, a registered business is where the software provider of that business uploads their NZBN as the ID number, which is visible on the PEPOL network. Now, many of these registrations can be credited to Xero, and if you look at late 2024, you can see a spike where there was a big push by Xero for registrations. Now, an advantage that New Zealand has, that the New Zealand market has over other countries, is we've got a really high proportion of SMEs that are already on cloud-based software. This makes it easy to grow the network and onboard your trading partners in New Zealand. So as of today, there are over 52,000 businesses that are capable of receiving an e-invoice. I want you to consider how that might overlap with your trading network. So for context, according to the New Zealand government, there are a little over 600,000 businesses in the country. Now, if we remove some of the businesses that are B2C only, subcontractors, trusts, and any other type of business that don't really send or receive B2B invoices, we're actually left with a number that's approximately half of that. Suddenly, 52,000 out of a 300,000 is a significant portion of businesses that are already enabled. Now, on top of that, many of the businesses that are not yet enabled may already be using software that is fast and free to sign up, such as Xero, MyOb, and Reckon. So the potential for enablement across New Zealand is huge. Moving on to the next slide, thanks. So I think the thing is that registrations are only important, they're not really important if no one is actually sending or receiving the transactions. Now, again, looking at some of MB's reports, we can see a 5x increase in the number of monthly transaction volumes over approximately the past year. Now, month-on-month growth continues to trend upwards, with a small spike in transactions every time we see a large organisation join the network and properly commit to onboarding their trading partners. Now, you may notice a small dip in June, and that has to do with one of the significant suppliers cutting down their transactions in June due to public holidays coinciding with normal billing days. We expect that'll correct itself in the following month. Now, an equally important statistic, which we like to track, is the rise in active users. This is the number of businesses that are using e-invoicing on a monthly basis. This number is currently around 10,000 and increasing at a rate of around 5% per month. So this means that businesses are starting to use e-invoicing and continuing to do so once they start. Now, moving on just to the next slide, I'd like to talk a little bit about some of the global trends we're experiencing in the network. And I think it's important to emphasize that this is not just a New Zealand thing, not just ANZ or APAC. E-invoicing is rapidly spreading across the world. Now, at the moment, there are currently 23 countries which have set up their own national PEPL authorities and adopted PEPL as their national e-invoicing framework. But usage is spread out beyond these countries to their global partners. We're seeing B2B mandates spreading across the world, which is impacting anyone who trades. The European Commission has announced a legislative program where e-invoicing should be mandatory by 2028 for all member states. Singapore are gradually rolling out mandates, starting off with new and small businesses. Malaysia has introduced mandates to assist with their tax reporting, and inverse to Singapore, they're starting with large businesses and phasing towards smaller. And the United Kingdom went out last year with a consultation paper on e-invoicing policy. Now, even Australia announced funding in last year's budget to explore policy options to increase economy-wide adoption of e-invoicing. They've also just recently announced that e-invoicing will be mandated for some types of B2G transactions. Now, the world is heading more and more towards this global economy, and pretty soon businesses of all shapes and sizes that are trading internationally will be expected as a prerequisite to have to send e-invoices to accommodate their global trading partners. Now, New Zealand is on the rise when benchmarked against other countries when we look at some of the PEPL reporting data we have. Looking at the monthly transaction statistics for each country, New Zealand understandably ranks at the lower end around 15th, but in context, they're also much smaller and newer in this space compared to some of the other countries. What is impressive is if we look towards the number of active users, just a reminder, that's the unique businesses that are sending and or receiving on the network. New Zealand jumps up to 8th. On top of that, at the current rates of growth, it's very likely that they'll jump up another position over the next year. So watch out, Germany. New Zealand's numbers are coming. Now, this might not seem like a big deal, but a really positively growing number of active users is an extremely good indicator on future growth and that the network effect is properly coming into play. So who are some of the key players that are actually doing this, and where are these volumes that I'm talking about coming from? Well, I think to begin with, we need to acknowledge the early movement from the New Zealand government. We've seen 45 agencies in total that are now capable of receiving e-invoices, and a further 9 that can send, with many more on the way. Even more impressive is the significant impacts we're getting from the New Zealand large business sector, who are showing leadership in the market. Already, we've seen an exciting list of names, including Spark, Bunnings, Countdown, Office Max, Datacom, Fonterra, Westpac, ACC, just to name a few, who have already started sending and or receiving e-invoices. And from a Tickstar perspective, we're proud to have been involved with the e-invoicing journeys for our customers Spark and Datacom, and Bunnings are also using our infrastructure through a partner. Now, just moving forwards towards the policy setting in New Zealand, I think I'll start off with just clarifying that New Zealand is early in the journey in the context of providing policy measures that will significantly drive the uptake of e-invoicing. Now, this initiative all kicked off way back in late 2018, early 2019, and this is when the government announced there would be an e-invoicing initiative and funding to explore a national approach. So shortly after that, an agreement was signed with Australia to align across ANZ, and the PEPL standards were adopted. It wasn't actually until late 2024 that we saw the introduction of an e-invoicing adoption policy announced by the government. And this came in the form of an update to the public procurement rules. So what these rule changes are is that mandated government agencies are required to abide by the following by 1 January 2026. The first is to implement e-invoicing send capability for agencies that send over 2,000 domestic invoices annually. Next is to implement e-invoicing receive capability for agencies that receive over 2,000 domestic invoices annually. Third one is to pay 95% of domestic e-invoices within 5 days. And finally, to report all these invoice payment times to MB, who will collate and publish them. Now, they weren't finished there. So following on from this, government went out for a consultation in March this year with a further range of proposed changes to the public procurement rules. Now, there are 2 changes specific to what we're talking about today. The first is a requirement that large suppliers to government must submit e-invoices. And secondly, that those same large suppliers must in turn pay subcontractors on no less favourable payment terms than the ones they receive from government. Now, I was really hoping that by today we would have had the outcomes of that consultation formally announced to the public. Unfortunately, that's not the case. So I advise you all to keep an eye out any day now to see an announcement come through from the government and the ministers. Thanks for that, Kris. I'll hand back over to you.
Thanks, Perry. I think we lagged on one of your slides there. Sorry about that. So my question comes next, which is, will we need a new accounts payable process? Some of the benefits of e-invoicing include consistency. Because e-invoices are pre-formatted, the receiving data fields are all in the same formats. Accuracy, the data is already data, so there's no need to OCR or capture or manual data entry. Security, email inbox steps are eliminated and sender ID is validated by the access points, and there's secure transmission across the network. And of course, automation and speed, meaning that validation of the contents of the e-invoice can typically occur a lot faster than with PDF invoices, and often in an automated way. So the short answer to the question is probably not. You shouldn't need to replace your AP process. However, e-invoicing should enhance it. The reason I'm throwing the word probably in there is because it is challenging to talk about an AP process in a very general sense, knowing that each one is a little bit different. However, at a very high level, most accounts payable processes should have some combination of these steps. Vendors will be sending invoices to you, and as we know, you'll have almost no direct control around how exactly they do that. For the most part these days, invoices will be emailed in, although you might still get some that are stuffed in envelopes or that might walk through the front door in someone's hand. Even if you receive an invoice as a physical piece of paper, one of the first steps is usually to scan it so that you can deal with it electronically the same way that you would with your emailed invoices. And I think it's probably fair to say that, with very few exceptions, the days of physically stamping pieces of paper with an approved stamp are now behind us. The next step is usually to verify that what you are looking at is in fact an invoice. Just because you have an AP email inbox, that doesn't mean it's the only thing that you receive into it. For example, there could be other legitimate documents in there, like statements or remittances or even general inquiry emails. There could even be unwanted spam documents in there too. So some initial form of classification to sort and filter out the non-invoice documents is usually one of those first steps. The next step is usually then to get the information out of the PDF so that you can do something with it. And we call that data extraction simply because we often do that as part of an OCR capture process. However, it can include manual data entry as well. E-invoices are not flattened into PDF documents, and because the data already exists as data, there is no need to do that data extraction step on an e-invoice. The information that you receive in an e-invoice is literally what the supplier keyed into their system when creating it in the first place. And this is where a lot of the accuracy of e-invoicing comes from, is because there is no OCR and manual data entry anymore. You are dealing with first generation data or information as it was originally entered. So the first three main steps of a typical AP process, an e-invoice would completely bypass. There is no email. We already know the document type is an e-invoice, and there is no data extraction needed. The process would then merge back together at the validation step. Irrespective of how you receive an invoice or an e-invoice, the way in which you validate and approve it should not be different. So for example, if you have something like, say, sign-off thresholds where anything over, I don't know, $10,000 needs approval from executive management, then that requirement should be consistently applied irrespective of whether it was an emailed invoice or an e-invoice. The sign-off limits are based on value, not format. Approval limits, of course, are only one type of validation that can occur, and there could be several others. So for example, with the DI invoicing service, we check to ensure that an invoice or an e-invoice meets all of the IRD requirements for GST invoices under $200, between $200 and $1,000, and over $1,000. We check the vendor identifiers like the NZBN and the GST numbers match approved supplier in the receiver's vendor data so that they know that the supplier has been onboarded correctly. We can check the payment account matches the one that was received as a part of the supplier onboarding. And we can check for the presence of a purchase order number or some other reference, and then also confirm it matches a valid PO number for that supplier. So generally speaking, no, e-invoicing should enhance your process and not require you to replace it or to have a second parallel process just for e-invoices. Now, it's usually at this point that a couple more common questions pop up, so I'll try and preempt them. The first is, will I still have a PDF copy of the invoice? The short answer is yes, though I say that with a bit of an asterisk next to it. From a PEPOL perspective, the inclusion of a PDF copy of the invoice is not mandatory for transmission across the network. However, when it comes to the industry practice statements, it is a best practice that is strongly recommended by MB and the ATO. Part of the access point accreditation process requires the access point providers agree to promote those industry practice statements to Australian and New Zealand businesses. So sending access points should be encouraging senders to include a PDF copy. And that's certainly the case when it comes to platforms like Xero or MYOB, where the default behavior is to include a PDF inside of the e-invoice. While it is technically possible, albeit unlikely, for the sender to deselect the include PDF attachment box when they are sending an invoice, and therefore it is technically possible to send one without a PDF. Depending on who you've chosen as your access point or your service provider, they might be able to provide a fail-safe functionality whereby if a PDF isn't present, they can apply the data to a template and create one for you. However, it's important to note that the legal document is the e-invoice and not the PDF, because the PDF might not be what the supplier sent you. As a worst case scenario, if your system requires the PDF object in order to route the transaction through its approval process, and the e-invoice you've received does not include one, and one wasn't able to be created for some reason, then in theory, you could still reject it back to the sender. However, we wouldn't necessarily recommend you do that because it is still a legally valid invoice document. The next question we usually get is, can we reject e-invoices that don't have a purchase order number? The short answer is yes, you can. You can reject e-invoices that don't have the PO number. However, you can't prevent them from being sent in the first place. There are several reference fields in the e-invoice format, the most common two being a buyer reference and an order reference. Neither of those fields are mandatory for transmission across the network. However, this is also where the industry practice statements come into play, and MB and the ATO have agreed to strongly encourage the inclusion of purchase orders. So once you've received an e-invoice, as part of the validations around evaluating its contents according to your business rules, you can certainly push back and say we can't pay this without a PO, or the PO that you've provided isn't valid. Presumably that rejection process would request the sender amend it and resend it to you. However, it's not the role of the access point to force the business rule on the network at large. Requiring a PO is a business rule, it's not a PEPAL rule. So any rejections around POs will need to happen as part of your accounts payable process and not part of the e-invoicing enablement at an access point level. The third question that comes up from larger organizations when talking about AP is they ask if there are different ways an e-invoice can be received. Some organizations have more than one trading entity or a number of sites and branches, different business units or separate departments. Each could have their own accounts payable email inbox for different parts of their organization, but from a company registration perspective, they all operate under the same NZBN. So the question is usually something like, how do we filter e-invoices to be received by different teams or systems? Fortunately, the folks of MB have come up with a concept of an organizational part number. Like an NZBN, the org part number is unique 13-digit global location number, and it means those org part numbers can be registered on the PEPAL network to receive e-invoices just like the primary NZBN can. So if you need e-invoices to be addressed to specific parts of your organization, you can create an org part and have that org part registered on the network as part of your enablement project. Then senders will be able to send e-invoices directly to that part of your organization. Every organization can get 2 free org parts, but if more are needed, you can buy more through the My NZBN portal. So I'll pause here for a little minute and let Perry now have a chat about sending e-invoices, and I'll come back to talk about supplier onboarding shortly.
Thanks for that, Kris. Now, I think a common question we get, we see from many organizations, is if they need to implement the capability to send e-invoices as well. Well, ultimately, this answer will depend on the number of invoices you send each month and whether that's enough to prioritize it before or after your accounts payable implementation. Another key decision point will be if you send invoices to government, you may get caught up in any upcoming supply mandates and you'll need to be conscious of those timelines. So what exactly does a sending solution look like? Well, I think first off, you need to look at how you currently send invoices. I assume that all of you will have some form of billing system, and that system is capable of generating an invoice in a data file. Most likely, that invoice data gets converted into a PDF, or in rarer cases, some kind of EDI data exchange with certain customers. However, if you're sending an invoice now, that file and format likely contains some form of structured data. And by that, I mean the invoice is defined. Invoice number goes here, line item goes here, GST goes here, and so on. Now, an e-invoice is simply transforming that structured data and format to align with the PEPAL standards. But don't worry, you don't even need to worry about that part. If you can get the data file to Desktop Imaging and Tickstar, assuming it's got enough information in it, we can process it as an e-invoice for you. So getting a solution set up is as simple as the following. You need the right data fields, the NZBN, and a marker of which channel to send the invoice, e.g. Email, post, invoicing. Now, starting with the data, the most important thing to consider when starting an AR implementation is to be pragmatic about your scope. So too often we witness organizations spending excessive amounts of time and money trying to create the perfect solution. This means it's really important to consider your customers and their invoicing requirements. Now, if some of these requirements fall outside what is recommended by MB in the practice statements, which was mentioned by Kris earlier, you may need to consider whether this customer should be included in your first phase of onboarding or at a later point. Alternatively, you can explore that if that data can simply be moved or remain on the PDF attachment and you only send what's required on the e-invoice. Now, the next part is the NZBN. Now, this is about making sure that the invoice includes the NZBN number of the receiver, as that's the address for e-invoicing. Now, the NZBN can be easily obtained by incorporating it as a required piece of information into your customer onboarding processes and contracts. And for those customers that you've already got them in your system, I encourage you to reach out to MB regarding their NZBN matching service. The next part I mentioned was a marker. Now, having a marker is important for identifying which channels the invoice needs to be sent via, and it allows you to filter out which data goes to your e-invoicing provider. Now, some organizations are already doing this to differentiate between paper and PDF invoices, and it's just a matter of adding a new option for e-invoicing. Now, the final part for optimizing your AR implementation is to be conscious about onboarding. Now, I mentioned earlier, there are already over 50,000 businesses already on the network, and your e-invoicing provider should be helping you identify this group and start sending to them first. These organizations are already signed up for e-invoicing, so you don't need to go through much time or effort to onboard them. This approach is probably proved most successful in New Zealand by Bunnings, who have already started sending e-invoices to customers that are already registered on the network and getting high volumes early on. Now, after you've addressed that initial target group, you can start to further segment your remaining customers and focus on slightly more complex onboarding activities, which times well for me to pass over to Kris, who is going to talk about onboarding.
Thanks, Perry. So a key starting point for onboarding suppliers when you are trying to get them to send you accounts payable e-invoices is to make sure that you have some realistic expectations. E-invoicing enablement is not a turnkey solution where you flip a switch and then all of a sudden all of your email PDFs magically start arriving as e-invoices. While you can be prepared to receive them, there's still a bit of work to be done to encourage people to send them in the first place, because ultimately you aren't in direct control over how your vendors are sending invoices to you. You also need to acknowledge that transitioning suppliers from emailing PDFs to sending e-invoices is not a one and done effort. The preference for e-invoicing and your organization's position on it needs to be ongoing and woven into a wider accounts payable policy. Now, for new suppliers, it's a bit easier because you've got some control over the terms and conditions under which you're engaging with them. So think about things like the T's and C's in your RFP and RFQs, providing a nominal weighting to vendors that can transact via PEPAL. Look at the T's and C's in your service agreements around invoicing and billing. You can review the supplier onboarding forms to make sure that you're asking for NZBNs and communicating a preference for e-invoices. You can also start providing your NZBN or org part numbers so that your suppliers know how to send e-invoices to you. For existing suppliers, it can be a little bit more involved because you're asking them to change something that they're doing rather than establishing something new. So as soon as you commit to your project, start by letting your suppliers know that a change is coming. Does your AP inbox have an auto reply set up to acknowledge receipt of an invoice? Or if so, maybe consider changing what that message looks like and adding information in about e-invoicing and then providing them with your NZBN. If you've got newsletters that go out or blogs or podcasts or articles on your website, all of these can be channels to make a little bit of noise. Do the folks in your AP team have LinkedIn accounts? Consider creating some posts for them to make or to share so that their connections can start seeing the content as well. Part of making some noise about the change that's coming is to consider maybe a vendor update form for all of your vendors. Not only can you share your e-invoicing news, but you can confirm their details, get updated account information, and update contact information all at the same time. If your e-invoicing project is part of a wider AP project, then cleaning up your vendor data is never going to be a bad thing, and you can kill two birds with one stone. If you issue purchase orders, and not just as a reference number, but actually as a document as well, then you could consider a small advert banner at the bottom of the document itself. And then, of course, there's the tried and true email campaign option, sending emails out to your suppliers, let them know what's happening, but don't just do it once. Provide updates, progress reports, and results afterwards as well. If you're asking your suppliers to come on the journey with you, then at least update them on the outcome so that they know that what they're doing is actually beneficial to both you and to them. To get some early traction, there are two kind of key groups of suppliers that you can target to encourage e-invoicing adoption. The first group of suppliers whose invoices are sent from Xero or the MYOB platforms. Identifying who these are is as simple as searching across your inbox for the Xero and MYOB domain names, because when invoices are emailed from those platforms, they do actually get sent from a Xero.com or an MYOB.com email address. So both Xero and MYOB are enabled to send e-invoices already. So asking those suppliers to send e-invoices instead of emailing PDFs is not going to require them to change their systems or their subscriptions. What we set up as part of our DI invoicing service is to automatically identify all emailed PDFs that come from Xero or domains. And regardless of how the invoice is processed and whether it's approved or rejected, we'll still trigger an auto reply back to those senders with an e-invoicing message, providing the NZBN a link to the appropriate website for instructions on how to send e-invoices from within that platform in the future. Of all the options I've just mentioned, this auto reply has been the single most effective promotional tool to encourage e-invoicing adoption that we've seen so far. The second group to target is the high volume senders. There's a generally accepted guideline that around 80% of invoices come from 20% of your suppliers. While that ratio can obviously fluctuate, the general principle is that in each supply chain, there is a core group of high volume senders, and that tends to hold true. So you can look at reaching out to those one by one, whether it's from the AP team directly or whether you have to involve other members in your team from an account management perspective, and start those conversations with messaging like, hey, if you guys can start sending e-invoices to us, then we can actually process them faster, more accurately, more securely, and ultimately pay you faster. And let's face it, no supplier wants to be paid slower. So moving on, we can look at a case study in particular. We have worked with Fire and Emergency New Zealand, which, if I refer to them as FENZ, is just their acronym that we've become used to saying. When it comes to supplier onboarding, all the suggestions and methods that we're offering are not just hypothetical. They are things that we have done with our partners, and we do know they actually work. So late last year, Fire and Emergency New Zealand put out an RFP for a new invoice data capture service for processing every invoice sent to every fire station in the country. And a key element of that RFP was to incorporate e-invoicing into the service so that the processing partner could enable them to go on the e-invoicing journey. They knew back then that the changes to the government procurement rules would apply to them. And of course, they didn't want to have to do it as a separate project. And that's exactly the approach that we advocate people take, is to not look at e-invoicing as a standalone project, but as a function of the accounts payable process. The go live date for FENZ was the 20th of March, and within the first 24 hours, we started to see e-invoice traffic coming through. And a big part of that was due to the initial work that they had done around their supply chain to make them aware that change was coming. Noting, of course, that from the 20th of March until the end of the month was only actually 8 business days, and also noting that many of the suppliers had actually already sent their invoices in for that month, there was still just shy of 50 e-invoices that arrived in those early days immediately following go live. April was the first full month of providing the DI invoicing service to FENZ, and in that month, the e-invoicing volume they received jumped to over 300, and that was just in 1 month. That was also when the auto reply emails to the emailed PDF invoices from Xero and MYOB platforms started to be sent in volume as well. And since then, the trend has continued upwards. I've personally spoken with some of the FENZ suppliers recently who have had a challenge around using things like the Xero reference field because they were already using it for a different reference number, and they were struggling to include the required business unit number that FENZ needed them to provide. So that supplier had been holding off sending e-invoices because they didn't know how to make it work. But after talking them through it and encouraging them to use the PO prefix, which Xero has included in their sending solution, they now know how to put 2 reference numbers in the one field, and e-invoices can be processed seamlessly. Without telling FENZ it was coming, we arranged with that supplier to send an invoice as an e-invoice so that we could watch for it and ensure it went smoothly. As part of that DI invoicing service, we received the e-invoice from the Tickstar access point. We confirmed the vendor was listed in the vendor data from the finance system as an approved supplier. We ensured that it met all the IRD requirements based on its value. We checked for the business unit number and the purchase order number to make sure it was valid. We matched the bank account number against the vendor data as well. And then we converted it into a format to pass through the Fire and Emergency Approval Plus system. From there, the e-invoice was assigned to one of their AP team members to do the coding before finally being flagged as approved for payment. Now, the supplier emailed me at 8:51 a.m. to confirm that they had just clicked send on the e-invoice and it was approved for payment in the FEN system at 9:16 a.m. So it took about 25 minutes from the supplier clicking send to go through all the stages I just mentioned to get to an approved for payments status. Now, I've spoken to organizations on both sides of the Tasman that can't even do that in 25 days, let alone 25 minutes. A few other stats worth noting about the FEN's journey so far is that with several months now behind us, not a single e-invoice has been rejected for being a vendor unknown. In terms of rejections in general, across both e-invoices and PDFs, around 8.8% of what they receive is rejected for a variety of reasons, such as vendor ID not matching, the IRD rules not being adhered to, or missing purchase order or business unit numbers. Or potentially even invoice date issues. However, only 5.2 of those, or put another way, 0.46 of all invoices are actually rejected e-invoice. And now this really does validate the accuracy benefits of e-invoicing, that they are less than 0.5% of the total invoice volume that are being rejected now. The last preemptive question that we had is how can we get started? Even if your e-invoicing project isn't imminent, we know there are some elements of what a potential e-invoicing project in the future may look like. So there are a few key things you can do now ahead of that project to lay the groundwork so that any work downstream becomes a little bit easier to manage. The first and most obvious thing is to review your processes. Now, this means both the AP and the accounts receivable process. From a project perspective, you don't necessarily need to do them both simultaneously. However, we do recommend that you take a good look at what you're doing and why you're doing it. You'd be surprised how often we encounter people that do various steps in a process simply because it's the way it's always been done, and no one has asked whether that action actually still has value. When it comes to accounts payable in particular, one thing we advocate quite strongly is that the way in which you process invoices should not be dependent on the method that you receive them in. So in other words, you should not have a separate approval process and validation process for e-invoices compared to the email PDFs. They should all go through the same decision-making. They should all be subject to the same checks and balances, and they should all be subject to the same sign-offs and approvals. So have a look at your AP process, make sure it's a good fit for the changes that might be coming, that it is up to date and current. Maybe do some analysis also to understand where your invoices are coming from in terms of volume and suppliers. The next thing to start thinking about is NZBNs. Here in New Zealand, our tax identifier is different from our company identifier. So we've always used GST numbers on all our invoices, and we've never really given much thought to the NZBN. However, you do need to start thinking about how you can store NZBNs of your trading partners to make that vendor validation easier. You also need to start thinking about sharing your NZBN or org part numbers with your trading partners in places like your email signatures and your vendor comms and your purchase orders, etc. Start preparing the supply chain for the change so that they have the time and the opportunity to start making the same changes for themselves as well. The org part number kind of dovetails into that idea of the NZBN because sometimes organizations might have more than one trading name or different branches and departments, so they may receive invoices addressed to more than one entity. However, from a company registration perspective, those trading divisions or business units might all be using the same NZBN, and it could make it a little difficult when invoices for more than one entity are arriving through one channel. So if, for example, you are, say, a large city council, but you also do the AP processing for, say, the zoo or the swimming pool or the information centres, then each could have their own organisational part number separate and distinct from the council's primary NZBN, so that when vendors are transacting with any of them, they can still address it to the correct entity and they can be filtered and routed accordingly based on who it was sent to. Supplier onboarding and supplier comms and making your supply chain aware of what might be coming is really important. When you onboard new suppliers, consider what that onboarding form might look like, how you manage expectations and what information you're asking from them. Are you asking them for their NZBNs? Are you communicating a preference to receive e-invoices over email PDFs? These considerations will also flow through to areas like the terms and conditions of your supplier agreements or the procurement terms and tenders and RFPs. Indicating a preference for e-invoices then allows your trading partners to make decisions based on knowing the impact of those decisions. After all, as I said earlier, the faster and more accurately an e-invoice is processed, then the faster the supplier is actually going to get paid. So it's in their best interest as well. But the most important thing is to keep talking about e-invoicing, keep that momentum going, find a trusted partner that knows what they're talking about, hopefully us, and start planning. You might not have a project scheduled for this month or next month, but at some point in the future, e-invoicing is going to be something that your organization is going to have to address. And if you're a government agency and you adhere to the government procurement rules, then that project needs to start happening now, because the mandate kicks in on the 1st of January. It may not seem like a lot of time, but this kind of project can be a lot easier than you think. So that kind of wraps up our prepared questions. So if any questions have come through, I'm going to ask if Eddie's still loitering in the background. Do we have any that have popped through, Eddie?
G'day, just turning my video on. We've got a few that have come through. We've got a few more minutes, so we may as well take those in the time we've got remaining here. I think the one that would be worth starting with is figuring out who the right person is in an organization to lead this sort of project, and maybe if you guys can talk to the sort of expertise and knowledge that's required. Who's the right person for someone to pick to lead this?
I think often the right person is either, I guess it depends on whether you're looking at receiving or sending for a start, but often that person kind of sits toward the top of the finance food chain within an organization. There will be elements of the project that will also have to incorporate members of the IT or the infrastructure team as well, in terms of the integration with the finance system. But in terms of the overall process and the desire to do this, that usually starts within the finance team itself. So whether it's the AP team manager or the AR team manager or the CFO, or the finance manager or the group accountant, or whatever title that person has, usually it's at the top of the finance food chain, and then we drag in the technical resource from the IT teams to assist.
Coolio. And maybe this one is more in your realm, Perry. I wondered if you could talk to, there's been a few questions regarding sort of the international scene of e-invoicing. For businesses that do lots of cross-border transactions, how is the international market developing, and how might a Kiwi business think about PayPal in that context?
Yeah, so I think I mentioned earlier we're seeing policy all around the Asia Pacific region. From a technical standpoint, and to anyone listening, I'll clarify that you won't have to worry about this level of technical detail. We solve it on our end. They've got PayPal specifications, which we're calling the PayPal International Invoice. And what that allows is the same invoice format that you're sending domestically can be transferred internationally, but information such as GST in New Zealand will just drop off because that's what your customer doesn't need. So I guess the short answer to that one is already in the background, what MB's driving from a technical point of view will cater to sending PayPal invoices to global trading partners.
Roger. I'm just having a peruse to see if there are other ones. We've got time for one more. We are at time, but should we squeeze another one in? What about the sort of, and we spoke to this a little bit earlier, but it would be good to expand on the support obviously provided in the initial stages has been made clear, but what about ongoing support from Tickstar or Desktop Imaging for a business? What can they expect versus what should they be expecting to do else?
From a desktop imaging perspective, support is built into the framework of our DI invoicing service. So as well as making sure that the data has been transformed correctly, it also includes things like adjustments. If, say, the PayPal format is updated, then we can accommodate those updates on the fly and ensure a seamless transition into a new standard. So in terms of ongoing support, that is all baked into the service that we offer.
Last one, I will squeeze one more in. What about for businesses who have got super high volume and they're worried about the sort of scalability of a Tickstar sending solution, Perry? What can you speak to that?
I think scalability shouldn't be a concern. As mentioned in my intro, we're covering at the moment about 9% of the global PayPal transactions. We've got customers who are operating up in the millions each month. So if you've got more than that, come to with your concern and we can test it against our load-bearing services, but I think we should be able to handle that.
Fantastic. That's all from me, guys.
Well, that about wraps us up, bang on an hour. So thank you everyone for attending. I'm pretty sure we were recording this. I really hope we were. So we can send out a link afterwards, but if for some reason you miss it, by all means reach out to us and we can provide the recording back to you or your colleagues if you need to see it. Thank you everyone for attending.
Thanks, everyone.